Common Knowledge Podcast, just a man doing the best he can with what he got. And I got a return guest, my guy, L. Maxwell, writer extraordinaire. In recent news right now, FTX has collapsed and went bankrupt, and the owner, Bankman-Fried, apparently has over $2 billion missing in consumer funds and accounts. Nobody knows where it's at. It's just gone, poof.
You said how much?
Air. $2 billion missing.
I thought it was up to like 9 to 10.
Probably is by now. I think we're gonna find out a lot more in the coming days. Because once again, blockchain technology ain't that good, but we're gonna find out a lot in the upcoming days about the shenanigans in the background. But right now, what's your thoughts on Bankman-Fried? Because people are asking, like, how could this happen? Or why didn't we see the signs with cryptocurrency and FTX?
Well, let's take a step back. You mentioned blockchain. For our avid listeners that aren't following crypto, blockchain is quite a good concept. Like, it's honestly like what they call decentralized, user verified, collective, what they quote unquote call verification. So instead of having one central reviewer or validator, everybody that's a part of the chain that owns a block of it, they all validate together. So as long as everybody agrees, hey, this is what the ledger, this is what everyone's account's supposed to have, this is who owns it, then you quote unquote don't need any centralized system. You have a decentralized system. That's how blockchain is used to quote unquote make money, right? And what is money? Like, we should step back. Like, why does even crypto exist? The reason why money works, fiat money, that is, the reason why fiat money works is because it is backed by something. The national GDP or economy or something. In the United States has the strongest economy, so that's why it's the world standard currently. Crypto is supposed to make a new world standard, so something that's not dependent on a world government, right? So it's competing against fiat money by enticing people to say, hey, nobody's in charge. Everyone involved is in charge. From a semblance standpoint, I can understand. However, when the moment you say people are involved, you already know bad actors are going to exist. Yes. And in the end, it would work once the world accepts it as a currency, where I could go to a store and present my my crypto wallet and buy something with it, and nobody questions the value of what I exchanged for those goods, right? But as of right now, people still have to, for the most part, with cash out, withdraw in fiat dollars, their currency that they want to use to go be able to spend it. Which brings us to why FTX crashed, right? So FTX crashed because of competing exchange. So first we have to step back. Crypto is supposed to be decentralized. There's not supposed to be an exchange, period. People are supposed to just work, peer to peer. However, once again, people are involved, and people are inherently lazy, and that is not a shot at anybody in particular. That's just mankind. We created air conditioning for a reason. We created cars for a reason. Humanity is inherently lazy because we're so intelligent. We learn how to be more comfortable. Likewise, when it comes to money, how inconvenient would it be? Is, hey, send me your wallet address and I'm gonna send it to you over the internet. You don't have to wait like 30 minutes for it to show up. No, the exchange, they bought a surplus of the quote unquote coins that you want to buy, and then it allows you to transact it as if you were using it just like the stock market. The New York Stock Exchange is using securities or equities that's we tie to a company's growth, right? Like Apple, Tesla, whoever. Well, crypto, they've made their own exchanges as well, tied to specific coins that some people think have different values. So first there was Bitcoin, the original, and then some people created a thing called Ethereum, which has different applications and uses. And then from there spawns like third generation of coins called altcoins. So FTX as an exchange, they housed all those different types of coins, and there's thousands, maybe not millions of different coins. Some of them most are worthless, but some people are betting betting the bank on it, literally, for these certain coins to take off, to become the next Bitcoin, right? Because Bitcoin started at less than $1 or less than $0.0001, and now it's worth $16,000 per coin, roughly. At its peak, it was like $67,000 a coin, right? So if you had 100, Bitcoin from the inception, you're clearly a millionaire now just with the coins you got. But here's the part that people don't understand. Coins or anything has to have a value, means there has to be a buyer and there has to be a seller.
Mm-hmm.
So this is where it all fell apart. So this exchange, which is called FTX had an exchange. They had their own coin that they used. They housed all these other coins. Yes. Yeah. Their competitor, which was called Binance, which is based in China, but the CEO's name is CZ. He's one of the first ones to create a centralized exchange and one of the most profitable. FTX is a direct competitor to Binance. FTX was going as far as to work with U.S. regulators to have a monopoly in the U.S. market for cryptocurrency exchanges within the U.S., even though they were in the Bahamas to escape taxes, which is kind of weird to begin with. But we can dive into the political, what I could say, the political conundrum that the Democratic Party has to face now.
Oh, a lot of funds came from Bankman-Fried.
Like, I know this sounds like all technical computer jargon, but this is the, in my opinion,
this is not Spotify,
just the shit hitting the fan. This is diarrhea hitting the fan, and you're in front of it, looking at it, trying to figure out why is it that it's coming our way, and you had nothing to do with it. You didn't tell them to go eat them tacos, right? You know what I mean? So just so this is what's going to happen. So this is what happens. So let's just go back. So FTX is competing with Binance, and in Binance, their CEO is like, some people say it was by design, but they had a whole bunch of FTX coins as well. Like exchanges, the coins can go from multiple exchanges. They don't just stay in one place. And that's the purpose of money. They want to be able to move it around, which is a whole nother scheme. People think cryptocurrencies to help launder.
Money laundering is definitely my main thing. Like, money laundering is the main function of crypto for me.
So going back to the premise, there needs to be a buyer and a seller. So, well, CZ and Binance, they had, millions of coins, and they said, you know what? We don't need these coins anymore. We don't think there's much value. We're going to sell all of them. And they were going to sell it for whoever wanted to buy it. People were buying it for, 20, 30% less than the value. But before they did that, FTX was like, oh, whoa. Instead of just dumping it on the market, how about you just sell it to us and we'll give you the current price, aka
$20, yeah.
AKA they didn't want the price, like think about a stock price. They didn't want the coin price to drop to unnecessarily due to like market aftershock. Because just like an exchange, a New York Stock Exchange, you can see a seller trying to sell his entire portfolio. So everybody in the market can see, why is this big wallet dumping millions of coins right now? And out of fear, they're like, it's time to sell. Everyone else is going to sell. It's going to react to it. This is human psychology playing into it. And guess what? Everybody did. It plummeted the price. People started getting concerned about FTX, FTT, so that everybody tried to pull their money out. And this is when the veil came off. You know what I mean? The man behind the curtain came off.
I think it's good to pause right here for a second. This also could happen in the New York Stock Exchange too. If you have a whale, somebody owns a lot of shares in a company, they can sell the shares and now make a run on the New York Stock Exchange too, and people send off their shares, right? So this ain't like weird. It's just when somebody has the majority of anything, if they sell it off, that's going to make a big market shift. So I just wanted to point that out.
It did happen. So it happened. I forget what year, but they called it like the flash crash. So not like what they call, was it Black Tuesday when in the 20s or whatever when that crashed. This happened more recently. I think in the 2000s there was a flash crash. This was caused by automation. So what happened was,
I remember that. Yeah.
So basically, the human element of trading is I'm supposed to go, hey Marcus, I want to buy a share of your stock. All right, here you go, El Maxwell. Here's your stock. Give me $20 for it, whatever. Well, we work in a day of computers now. We have automations, bots that do that. They will look and wait for a certain signal, and the signal, for whatever they program to be, will tell them to buy or sell. And if everybody has the same bot and the same signal, just somebody could inadvertently accidentally trigger all the bots to start selling, right? And then it's going to take somebody to manually to say, hey, why are you selling all my stock? I didn't want to actually sell this. That you're overreacting, but you can cause a stock price to crash inadvertently. That happened a while ago. They called it the flash crash. They couldn't explain what happened. And then when they looked into it, there was basically a bunch of bots overreacted. There's measures in place now to kind of prevent that. But in crypto space, it's decentralized. There is no validation. There is no not valid. There is no what they call what's the things? No. What's the thing they're looking for? There is no regulation, right? Yeah. There's no regulation. It's literally the Wild West.
It's Wild West, yeah.
Yeah. Anyways, back to what happened with FTX. So when it crashed, it took the veil off, and people saw you don't have any money. You actually don't have any capital to back these transactions. Like, you were sending people IOUs. People were buying Bitcoin, and they didn't have any Bitcoin in the ledger. They didn't own any Bitcoin. And then they start digging. I was like, where's all our money? Like at minimum, you should still have our US dollars. You should still have our euro. You should still have that. They embezzled the money, or they haven't used the word embezzle yet, which is a whole nother topic. I consider it embezzling. You take money from one business to funnel to another business. That's embezzling. So they took money from the client's deposit accounts, which is a huge no, is illegal, and they use it to prop up a bad one of the other entities, Alameda Research or whatever.
Yeah, Alameda Research.
They had an $8 to $9 billion hole in their balance sheet. They were trying to, like, I get maybe 1 billion. Hey, file bankruptcy, it happens. But they kept compounding and making bad trades after bad trades to the point where they accumulated over $8 billion of
sad
debt.
Thing about this would have kept on going on if that didn't trigger, because it was a basic cash loop. Basically, what he did was he took the money out of FTX, took it to Alameda Research, who was the biggest investor in FTX. So it's a cash loop. Like, everything was just working to everything. Only thing that kept this going was the coins, because he can put some more coins in the market. People can buy those coins. He'll get more funds, which, look, technically you could do that if you were putting your own coins in the market and people was buying them of their own free will. But when you take those investor funds and put it in Alameda, and then Alameda is supposed to be propping up FTX, like you said, big no-no. I don't know how that's legal.
So the money they used to grow so quickly was legitimate. They got a ton of investors, but the investors did not do their due diligence. They were looking at it as simply as, I don't want to be late to the party. I want to make as much money as, because granted, he did legitimately build up a lot of wealth on his own before starting the exchange. It wasn't like FTX failed. FTX was successful in its own right by itself. But when they started making all these other companies and trying to, basically they got greedy, and they said, hey, we can keep doing this again and again. And they thought they were clever. They'll never get caught. So FTX, the coin FTT, they would simply, one thing that you and I can't see when an exchange is like, we can't see everybody's orders and placements at the same time. Like, we can see when there's live and people are trading. We can say, hey, there's a somebody's trying to bidding for 1,000 of this at this price, but it hasn't hit that price yet, so the order is not going to go through. They figured out, hey, as a crypto wallet, they have their own wallets. They were purposely gaming the price, buying and selling to themselves over and over, just to increase the overall price of the coin. So then retail people, like, who has nothing to do, that don't even work for the company, they're like, oh crap, FTT's going up 10% this week. But it was all a ruse.
They were manipulating the flow.
They were manipulating the flow to where it was going up. And then once they could show investors, look at the value of FTT, it went from $1 to now it's $20. And in the banks, these real banks or whoever, investors were like, well, I'm going to give you a loan, or I'm going to give you this.
I see the capital. I see the flow.
Yeah, I see the return. The return on investment is 2,000% in a day. Like, it goes back down to a very old comment. If it sounds too good to be true, it probably is, And there were so many steps. Like, just asking you a simple can we see your balance sheet before we invest with you? Whenever people would ask for that,
I found that weird. Nobody did that.
No. The people that did, he told them to F off. Don't talk to me. You don't want this money, whatever. I'll go talk to someone else. I'll go talk to Tom Brady and Giselle.
Tom lost a lot.
Yeah. We won't talk about the celebrity aspect. I mean, they got paid to endorse. I understand it. They're not financial wizards, but at the same time,
I'm not an expert, and I don't have to be.
I'm not an expert, but you see, I won 7 rings. So therefore, you, Mr. No Super Bowl rings. If you want some of these 7 rings I got, you better start investing. And that's why there's a class action lawsuit now against all these celebrity endorsers. Because it's weird. So basically they were printing money. And it probably would have worked. It probably would have been propped up just fine if they hadn't moved money out of people's cash accounts to support a business that they didn't, you can't do that. You can't be like, That's essentially that is a Ponzi scheme. You're taking someone else's money to pay back someone else.
But I thought we were through with this since Bernie Madoff. So is the answer just simple as regulation?
The crypto market is still unregulated, and by design, it's never to be regulated. The people, the people regulated. The validators. Everybody's wallet and whenever people say like they got a Bitcoin farm or this and that, those computers essentially they run all these calculations to confirm that the ledger that exists, everyone agrees that these people own these coins, these people own that coin. The price itself, that's just determined by buyer and the seller. What are you willing to pay for these coins? And I'm not going to tell you that I didn't get burned. I mean, I probably lost a couple $1,000s in crypto, and I stepped away from it.
Me too. That was my whole thing. I didn't have the money to risk. When somebody brought it to me, and I kept asking the explanations I got, I was like, too risky for me. My portfolio was super small. I was like, let me go ahead and put this money into something I know that's backed by a government.
What I can only speak for myself. I come from a family of refugees. So, when it comes to money, it was always, labor wages, right? We're working by the hour or this and that. I'm, first one to make it out, college, graduate degree, all that kind of stuff, which is great. But I also still come to the realization that the only real way to get from a point of, just above average expectations is you have to invest.
You have to. The money has to work for you.
And investing doesn't just mean stock market. It could be, you bought a house at the right time and now it has equity, and you sell the house, you keep the difference to yourself. You invest in a skill, right? So whereas you went to school and you got a trade or you didn't know, that's an investing. Investing is the only way you can change your circumstances.
And that's why I never got mad at these people who got duped on this. Like people was calling them idiots. I'm like, no, I can't get mad at anybody who's trying to change their situation and get generational wealth for their family. I can't get mad at you. It's just, this wasn't it. Like you saw a chance and it was a risk, but I just hope y'all had the money to risk on this. Cause I know some people personally who lost some money on this FTX thing. And I'm like, dude, don't beat yourself up. Like you saw a chance and you took it. It just didn't pay off.
I am not a financial advisor, but I do have certain ground rules if you choose to invest. Do not invest more money than you're willing to lose, right? Don't and likewise, don't borrow money to invest, because
that's a key.
That's what happened. So when they say the word leverage, when a company's over leveraged and that's why they went bankrupt, like FTX, that means they were borrowing money to invest. And not only did they lose on whatever they invested on, but they still had to find a way to pay back that money, and they couldn't. So they messed up both ways. Like, if you just lose your money, then that's fine. You don't owe anyone anything. You just lost it. You learned a valuable lesson. But they were borrowing money and losing it. So
go to my Discord page. Like, go to Discord. I'm telling you, you see people like with lost porn who done over leveraged and bought too many calls. I'm like, yo, this is crazy. You borrowed money for this? Like, oh, really?
Yeah. You invest when you invest, you're taking a risk. The more risk you're exposed to, the higher your reward you're exposed to. So it's a perfect balance. I'm learning to quote unquote manage my risks or hedge my losses or hedge my bets, but I am not by any means an expert, but I do know that people have made money, but everybody can't make money. You know what I mean? Like everybody, it's a buyer and a seller. Somebody is going to get the short end of the exchange. Everybody can't win.
Let's talk about the other side of this, man. Bankman-Fried was backing a lot of politicians, and this gets interesting because it's not just the celebrities, man. He put money into the Democratic Party and the Republican Party, but more so, I would say, if you look at the balance sheet to the Democratic Party. What do you think are the long-reaching implications of this, and what should they do? Because right now, you see a lot of people in the DNC right now returning the money and trying to distance themselves. I'm like, that money's spent overall. What do you think is going to be the next step on that?
Politically, it is not a surprise that somebody had an ulterior motive when they're making an investment. I mean, he told the world that he was trying to give back to the world and give his money to charity, and he felt that the Democrats are more aligned to it. But I think the guy, I'm not trying to give him any. I'm not trying to say for like I think he's a terrible person for what he did, because he had to have known. Like, we're not going to give you a pass and be like, you just didn't know, because perhaps, let's say maybe he had some sort of behavioral disability or something. It's like, I don't care, dude. You had what, $12 billion? You know what I mean? Like,
they gave him money.
Yeah.
I'm not falling for that. Like, yeah,
no,
maybe.
that's what I'm saying. So it's, and the way he's responding to it all now, it's just kind of like, you could just tell, like, underneath it all, he just got away with swindling all these people for so long. And he knows his life is over. Like, Bernie Madoff got practically 150 years in prison. So he's probably going to get life in prison too. You know, from a statistical standpoint, they probably give 300 years. His girlfriend or ex-girlfriend, whoever, the one that was the CEO of Alameda, which, oh my goodness.
That was a red flag.
Hearing some of the comments that she made in regard to risk management, I was like, what in the, like, I only know about it after it happened, because I didn't trade on FTX. I traded on like Binance, right? And some Robinhood, right? But even then, you know, I got out of it for personally. Do what you will. But I think she's over there in Saudi Arabia now chilling. So,
yes,
you know,
he was trying to go to the Middle East.
Yeah, but no, the point is when it comes to Democratic Party, I think they will prosecute him in the sense of like this, but it's just going to make it harder for them. It just gives in the end, the opposition is going to use it against them to try to get more votes. But is it going to de-seat anybody? Is anybody going to jail for Democratic Party for accepting a donation? No, they're just going to be like, maybe they'll vet the next person better. But I mean, like, he gave a lot of money, like $40 million.
He gave $27 million to the Democratic Political Action Committee called Project Our Future. He gave $10.5 million to Carrick Flynn, who lost the Democratic primary. So that's just money down the drain. He gave $2 million to incoming Texas Congresswoman Jasmine Crockett. He gave $1.5 million to the Oregon rep, Lucy McBeath. Oh, he gave money to the R&D to the tune of $15 million. Like, dude was throwing the money out there. The sugar was flying around.
If you think about it, if you say he was worth $12 billion, you divide that by, I can't really do math right now. I don't know, what is that? I can't even do the math. Like, it's less than 1% of his total wealth, right? So, you know, it's not much, or maybe 5% of his wealth. Well, I mean, for him, it's securing his monopoly or securing his Ponzi scheme. That's what he was trying to do. And I don't know. I would think I have some integrity, but I've never had $20 million waved in front of me. You know what they say, do some strange for some change, right?
Oh man, $20 million. There's a lot of stuff you're going to do. You're going to bend over backwards and pop it for $20 million.
Like, I remember that episode of Martin when Cole was like, you know, they were trying to kill Martin. They thought Gina was trying to kill Martin because she took out a $2 million life insurance policy. Shoot, like Cole said, for $2 million, I kill myself. You know what I mean?
Yeah. Oh, so what is the lesson in all this?
The big lesson is, you know, I can only look at it from a perspective of a brown individual, right? Like, I would think that I would need to have such a concrete, airtight business plan with a balance sheet and everything to show my potential investors, why they should give me their money, right? This guy, I don't know what made him so special. And some people are bringing up his background, or, you know, the fact that his parents had these ties, or his professor had this tie to that person. It was a whole lot of nepotism for them to just ignore standard practices. You know what I mean? And I don't think it's specific to his particular background, but I think just the fact that he had specific connections, especially with his parents and then his professor.
Who was his parents?
His parents, they were both like, they had like legal backgrounds in regards to like auditing and things like that. Or you know, they were part of that create, you know, of financial systems, right? Making those type of things. And then his professor knew somebody at the SEC or something like that, and they helped him come up with to figure out what the regulations or loopholes he would need to avoid. That's why he was in the Bahamas. He wasn't in the Bahamas because he just really wanted the sun. It was a tax haven, you know? Yep. So it's like, I would think that what's going to happen next is there's going to be a huge magnifying glass on crypto in the future. And as to whether or not, it's not going to start with the United States. The United States was late to the party. China was first to the party, what CZ was in Binance. But it's going to take for somebody to just say, like some country to say, this is banned in our country. Like, wholeheartedly. Like you cannot, or whatever, right? And then people are gonna get upset about it. I think it might even be banned in parts of Europe. I'm not sure, but it's gonna. Where the downfall, or I guess the house of cards is not fully falling yet. Everybody that's impacted, people don't even know who's impacted yet. More and more companies filing bankruptcy, not just related to FTX, but like they had some sort of relationship with them where they did exchange or something, or they get freeze. People are freezing accounts, and it's bad. It's going to be bad. And all I say is we better not bail out not a single person.
Big facts.
Like I don't care. I don't care if Singapore it has a pension plan that's related to it and they have no way to pay. Sorry for you. You know what I mean? Because then they it's just at some point we got to understand that everything is propped up with funding money anyways, right? But when funding money hits the regular person price, cost of goods or whatever, and inflation's going crazy, it's like, the people that are complaining that they're missing money, like I'm not saying everybody that's impacted was rich, but the really rich folks, I mean, they're looking for a way to get some money back, or whatever, right? And it's like they don't really care about the retail investor, the small guy that put in $2,000 and that he had saved up, and that was his entire savings or whatever, right? They don't care about that guy. They're just gonna say, well, you shouldn't have invested. You could have been as bad as Tom Brady, who only invested, let's say, 20% of his wealth. Well, whatever. I don't know. I'm not going to tell you what's going to happen. I just think it's quite funny because it's like after hearing them folks interview and talk about what they consider risk management, like I think what's her name? I don't even know her name, but the one that was over Alameda, she was saying that they don't really do stop losses and they just use elementary math. I'm like, that's great, but then show us how much money you made, right? Because it's if you are actually making good money, then it's just like, hey, look how much money we made this year. It would just attract more investors. But they were hiding all of it. They were very hush hush about what they won on, what they lost on. And then if you look at the whole market, the market by itself wasn't a downturn, right? We're going into a recession. We are in a recession, right?
They was booming.
So how that just shows you that like something doesn't add up. Like you can't just win every year. It's
like the money was making money because it was money. And my big takeaway from this whole thing is, like you said in the beginning, if it's too good to be true, it most likely is. And if anybody won't let you see their books, run away. Like that's the first sign. Like, oh no, you can't see my books. How dare you ask to see my books?
Hang around the people you want to become like. You want to be rich, hang around rich people and see how they became rich, right? Like not just rich people that inherited. I'm talking about people that actually earned their wealth. They started with nothing and they made something of themselves. Figure out how they did it. If you hang around a bunch of broke people, you might end up broke. Likewise, if I have a good idea that's solid and, I share it with somebody and then they're able to replicate my results or something, or I just feel like it's so disingenuous for them to be like, we don't know how we keep making all this money. And then the truth comes out as, you were inflating your books. You're making stuff up.
Then it's your fault for not doing your due diligence. You should have known. Look, you should have known, guys. Like, come on. All right, that was not my fault. You should have known that something was wrong. Man. That's your fault for not asking to see my books.
Man. it's pretty bad, but at the same time, it's like, it's baffling because it's like, why does this happen now? Right? Like crypto in itself has always been a speculative market, but now in the fall things, Ukraine's going on. We just had the midterms. It happens all of a sudden. Like to me, it's like, I feel like, I don't know. Are we being distracted or something? Like, did we ever figure out what happened to Kanye? I don't know.
Big facts. It's like, a lot of stuff is coming out now, and
I mean, that's what we really care about, right? What is Kanye doing?
Is Kyrie really an anti-Semite? Like questions need answers. The hell with FTX.